With its S4 registration now declared effective and the shareholder merger vote set for February 12th, Churchill Capital Corp X is quickly becoming one of the most closely watched SPAC to quantum plays in the market. As the transaction moves into its final stretch, anticipation is accelerating around CCCX's transformation into Inflection, a quantum technology company many investors view as differentiated from typical early stage quantum startups due to its commercial traction, government backed programs, and deployed technologies. A major catalyst driving this surge in interest is Inflection's newly announced collaboration with NASA's Jet Propulsion Laboratory, JPL, on the Quantum Gravity Gradiometer Pathfinder mission. The initiative is backed by more than $20 million in contracted funding to develop the mission's quantum gravity sensor core, an advanced instrument designed to enable ultra precise measurements of gravitational fields from space. Community members see this as a powerful validation of Inflection's technology, underscoring that its quantum systems are not confined to laboratories, but are being engineered for real world, mission critical deployment. Beyond aerospace, investors are also pointing to new energy sector contracts and partnerships, where Inflection's quantum sensing and timing solutions are being explored for applications such as subsurface mapping, infrastructure monitoring, and resource optimization. These developments are strengthening the narrative that Inflection operates at the intersection of quantum, defense, space, and energy, giving it multiple avenues for commercialization. A central theme across discussions is valuation. Many traders argue that Inflection appears undervalued relative to publicly traded quantum peers, particularly when considering its leading neutral atom quantum technology platform, existing revenue streams, and growing base of contracted funding. While several listed quantum companies trade primarily on long term potential, supporters emphasize that Inflection already generates revenue and has government and enterprise customers, which could justify a premium as awareness grows post merger. Taken together, the effective S4, imminent boat, NASA collaboration, and expanding commercial footprint are positioning CCCX/Inflection as a high profile quantum transition story, with investors increasingly framing it as a rare combination of cutting edge science and near term tangible application, an appealing mix in a sector often criticized for being years away from practical impact.
So the stock is up 13.09%. This is Tuesday, the 10th of February 2026. So far, 2.7 million shares have crossed the tape above its 50-day average. Okay, let's see. It's hard to borrow, but no, it doesn't really cost you much to borrow, it seems. So this is the 4-hour chart. Let's see. Let's just quickly begin with its daily chart. Okay, no extrapolations here. No extrapolations on the daily chart. Okay, so the stock is showing some strength within a medium term bearish trend. Yeah, it has a pivotal projection of 15.01. Yeah, 15.01. It was initiated on the 21st of January, still has been reiterated today, the 10th of February. If it closes above that, above this pivotal moving average, maybe not anytime soon, then we're looking at the prospects of advancing towards this Fibonacci projection here of 15.71. No guarantee that that will be the case. The probability, okay, there's before that, there's this rejection here at around 14.23. The probability of that printing is higher than 50% going by the moving average. The moving averages are here. The first one is the one I consider, that's the 10-day moving average. So if that moving average is greater than your target, which it is, then we know that we have a probability that is greater than 50% that the target, which is 14.27, will print. Okay, but at the same time, it's just statistical. There's no guarantee that that will be the case at all. Okay, going back to its 4-hour chart. Okay, so here we have an extrapolation. It's saying that this strength might remain in place up till the end of today's trading session. After that, where there's a the indication is that, or rather, the extrapolation is that the downtrend may resume after that. Okay, but in any case, we can take the projections we have here. We have 6.81, 8.08, 8.06, 10.08, 12.8, 13.71, 14.28. A couple of there's a pivotal projection in play here. That's 14.28. It's a tall order, but you never say never. You know, and the stock is outside of its market grid. The market grid gives us a range of possible prices, and it adjusts every 4 hours because it's a 4 hour chart. If it's a daily chart, it will adjust every at the beginning of every trading session. So we may have to look at the 1 hour chart to see. Okay, yes, we have it in here. It has the market grid has adjusted. We have before we get the market grid. Okay, we can combine everything. Let's see. Yeah, we can combine everything and see what we have. It's the trajectory is to the upside, whereas the extrapolation is saying that it may begin to flag. It may begin to contract this expansion from 11 a.m. New York time. Okay, there's also no guarantee that that will be the case. Okay, so here we have a range of between 13.04 and 11.74. The stock is currently at 12.55. So this is where it is right now in the resistance zone. So if it begins to advance towards R3, 12.88, as things stand right now, then the reason to remain in the stock will begin to diminish. The reason to remain in your position, it begins to diminish. So at this sort of level, you should be considering taking profits or cutting down the size of your position if you want to remain. I mean, it's all up to you. If you want to remain in the stock. But it's up to you if you want to share it. But this is more of a trader's perspective. But some people actually treat their portfolio like they are trading. Every day they. But of course, sometimes it's usual. Not a lot of people, but yeah, yeah, I would say decent amount of people I can imagine. They treat these things. I mean, swing trading. That's what I'm talking about. Swing trading. I mean, if you're in a position for the long haul, I mean, you could still do swing trading. Nothing really stops you from sticking your guns until the next 25 years. I mean, not going in or out. I mean, what am I talking about? People do that. They go in and come back and all that stuff. So okay, so let's see now. As things stand right now, 12.48 is the current price. Okay, 12.54 is it the resistance? It's not very much of a resistance. Nothing there is reiterated. Nothing there. 12.54, not much of a resistance. No, not much of a resistance. Okay, 12.71, not very much as well. 12.88, not very much. We want to see prices closely packed, close a lot more closely packed. I would say something close to maybe 12.4. Then we can say it's. We'll say that we have a robust resistance. But as things stand right now, maybe not really that much of a resistance. So yeah, the stock is trending right now, and just see what you make of it. And this may not. Okay, let's see now the daily chart. We have to have a look at its price pressure momentum. Let's see what it's indicating. Let's see what it's indicating. It's not. It's still bearish, I think. Yeah, still bearish. You can see it's still losing. That's this moving average is still dropping. Still dropping and losing around $3.3 every day. So if the stock continues to show more strength, then it may reverse all of that. And the derivatives are all negative. Let's see. Are they? Has it? Are they? Yeah, they have. They're even worse now. Yeah, selling pressure has even worsened. and the pace has even what has the pace of selling has increased as well. Yeah, so you want the stock to begin to trend. You want it to, even though it has shown some strength, when it's gone from 10.68 to where it is right now, gained up to 20%. But you may want to see more. You may want to see more, and indeed, some people may want to jump in as it is now. You know, yeah, some people may want to jump in now, but yeah, it's all up to you. If you want to do so, just be really careful, and always with amounts you can afford to lose. If you don't take the risk, you wouldn't know. But I'm not recommending that you should buy at all. I'm not recommending that you should buy. I'm just pointing out things here. So um, going by what we have here, I would want to see something stronger than this. This moving average is still dropping. I would want to see the moving average improve. Get to at least right now it's severely bearish. I want to see maybe at least from yeah. I just want to see it start trending. Indeed, if it starts trending, or the opportunity may have gone away, but I want to see that. I want to be convinced that this is this it has built up the momentum. I want to be convinced about that. So and moreover, today is not exactly the best as well. But it's a mix of things. When do you go in? Then when do you go in? The fundamentals sound good. The company is making money, and it's no longer Churchill's now inflection. Inflection is making money, and it's making an impact. It's making an impact, unlike the other SPAC, the other quantum stocks, and most of them have most of them have are strongly bullish. The underlying trends are strongly bullish ones. Let's just see RGTI. Yeah, you can see on RGTI not making money at all. Underlying trend strongly bullish. So one can say, if these other stocks are not making money, and this triple CX is making money, why shouldn't I go in? But it's all down to you. It's all down to you. So yeah, see what you make of triple CX, and thank you very much for watching this video.